Over the past 2 decades, there have been significant and enabling technological improvements in drilling and subsurface engineering, many of these developments occurring within the oil and gas industry. A large majority of these technologies have not yet been adapted to and applied in the geothermal context, and purposeful technology and knowledge transfer are expected to have breakthrough impact in driving down the cost of geothermal projects. At the same time, a flourish of geothermal startup companies are pushing forward new paradigm-shifting concepts in well and surface plant design. But deployment of these new technologies and concepts, called first-of-their-kind projects, create financing risk, and currently, there is not a funding mechanism able to address this need on a widespread basis. A fit-for-purpose funding mechanism is needed to quickly fund teams developing first-of-their-kind power or heat-producing geothermal projects in order to drive fast field deployment in geothermal, while concurrently proving the impact of bleeding-edge technologies and methods on geothermal projects, driving down cost through learning and iteration in the field. Further, helping teams traverse the funding valley of death for first-of-their-kind projects will unlock significant private investment for subsequent geothermal projects via traditional funding mechanisms. So, what types of entities are considering funding mechanisms for first-of-their-kind projects? What are the challenges, and how can collaboration across entities help us bridge this funding gap for geothermal projects? Let's explore.
Hello, everyone. Welcome to our session. So this is a really exciting session. It's really, where's the money? So we need we've been talking for a week now about the capital deployment into not just geothermal, but technology that will help reduce large-scale greenhouse gases across all real assets categories around the world. I'm joined by an esteemed panel, literally with access to trillions of dollars. So the money that we need to not only get our geothermal projects off the ground into large-scale deployment, and ultimately to get us the power that we need around the world, and they have the know-how. So I'm Carolyn Abramo. I am the CEO and founder of Pana Low Carbon Economy, based in New York City. We are a private equity, growth equity firm. We are dedicated to GHG reducing technologies that are commercially viable. So we're later stage investors. We're typically Series B forward investors, and which is a really critical point for many technology companies as they scale into projects and manufacturing into large scale deployment. And we find it's a big gap in the market, not just for geothermal, but for all technologies. We've been operating since 2019, and our mission really is to be able to provide transparency into all the areas of GHG reduction technologies and create a timeline for investors of how long it will take to get to market. Hopefully speeding up, because we definitely don't have time and we'd like to reach Paris Accord goals. So our mission is for transparency and to invest large scale, again, with growth equity that would scale into infrastructure. Our metrics are both to do well and do good. So we're looking for market-based returns, anywhere from 20 to 30% IRRs over almost a 10-year hold, mostly 5 to 7 year modeling for our team, as well as reduce large-scale greenhouse gases. We have a fund. We have our first fund that we are now deploying capital from, as well as co-investment programs and advisory. So with that, I'm going to introduce the panel, and I'm going to start with each one. So Thomas, would you introduce yourself?
Yeah, hi, Tom Pollog, an engineer with DOE's Loan Program Office. I've been working in geothermal for the last dozen or so years. Several projects I've helped bring to market, and they've been producing them pretty well. So glad to be on the panel with everyone.
Thanks, Thomas. Bryan, can you introduce yourself?
Hey there, everyone. I'm Bryan Shill. I am an investor principal with Prelude Ventures. Prelude Ventures is an early stage venture capital firm based out of San Francisco, with the mandate to invest behind companies that we think at scale will help reduce greenhouse gas emissions. So we're financially oriented, but with the lens of combating climate change. We got founded back in 2013, sort of in the wake of Clean Tech 1.0, where there wasn't a whole lot of capital going to work into new early stage companies and technologies that were trying to combat climate change. Fortunately, that narrative has shifted quite a bit over the years. But given that we are focused on investing behind companies with that mandate, we've done a lot of work in clean energy and what was traditionally called clean tech, but have also invested across the full range of climate techs that includes food and agriculture, transportation and mobility, advanced manufacturing, and advanced computing. Excited to be here and excited for the panel.
Thanks, Bryan. Ananth?
Sure. Hi, my name is Ananth Pharshy. I'm setting up the Early Climate Infrastructure Program at Prime. And for those of you who don't know, Prime Coalition is a Cambridge-based nonprofit, Cambridge, Massachusetts. We mobilize catalytic capital to support climate solutions that would significantly reduce greenhouse gas emissions and that might struggle, like for projects that might struggle to raise sufficient support without us. So it seems like we're in the right place. One of the things that we do is, for instance, if there's a startup that is looking for technology that is too long cycle for the traditional finance first investor, or if there's binary deployment risks, those are the kinds of things that we would step in and try to help out with. Like catalytic capital, for anyone that's not familiar with the term, enables, accelerates, and or deepens impact that wouldn't be possible without it by absorbing risks and getting into doing things that finance first investors usually can't or won't take for return risk type considerations. Since its founding, Prime's always been kind of started out as a VC kind of investor that channeled philanthropic money into climate tech startups. But then this problem of first of a kind projects has always been kind of front and center for Prime. So about a year and a half ago, Prime went out and started to do a study to more deeply understand kind of what the issue is with first of a kind projects. The result was, like a year later, a fairly large study with 140 interviewees who gave us their opinions on what the gaps were. The report itself is in the show notes for this panel for anybody who's interested. It's required reading, I think, for anybody who's looking at climate tech financing, especially in the context of what we've identified as kind of a second valley of death for technology companies. And for what it's worth, it's also what brought me to Prime to set up the Early Climate Infrastructure Program. What does the program do? We're looking at anywhere from 3 to 5 investments in technologies that are specifically caught in between where venture capital lets off and where traditional project finance companies come in. So what that means in reality is, if you're looking for funding for a project that your bankers are telling you they're not ready for yet, come to us, we'll try and help you. We'll see how we can figure this out together.
Thanks, Ananth. I think you'll have a lot of emails in your inbox after this. Same with everyone. Arash, can you please introduce yourself?
Yeah. Yes. Sorry, I'm a little under the weather, so my voice is graspy. I'm a managing director in Citi's Clean Energy Transition team. Clean Energy Transition investment banking team was established by Jane Fraser in 2021 with a commitment to help enable and enhance the economy's ability to transition to net zero. So what we do as investment bankers is help capitalize and advise companies, usually past Series B and Series C, D, and into the public markets through capital raises, go public transactions, and sales and acquisitions. Year to date, we've raised $2.5 billion for 16 companies. That those are generally between the size of 100 to 400 million. Most of that has been in equity structure, but a variety of structures. It's convertibles and debt, et cetera. Very excited to be here. We spend time with companies from all the way to battery materials and minerals, to battery manufacturing, to hydrogen, to agricultural technology. So cover a wide swath, enabling and enhancing software, carbon markets, et cetera. Very excited to be a part of this discussion and look forward to the debate.
Thanks, Arash. So what we thought we'd start with was really maybe setting context for geothermal, but basically how did we get to where we are today, and using some of the early investing that both Bryan and Tom have had. They've had over a decade or more collectively, each of them and collectively even more already in the geothermal space. So I thought we'd start with them just to talk about their experience thus far, and and if anything, maybe some of the successes thus far and some of the challenges that they've seen. Bryan,
Yes.
do you want to hit it?
Sure. So maybe I'll kick it off. And I think sort of a good way of answering that question is laying up why we are in the place that we're at today. Sort of like why the reason that this panel discussion is titled Valley of Death, right? Like why that's important for geothermal. And I think it requires a little bit of history of investing behind clean energy. So, I mean, as we all know, and most of everybody that's watching this panel understands, the way that the United States grid traditionally acted was based off of, large base load generation assets that were all centralized, that could run at really high capacity factors, that were running for very long times and were very reliable. As we as a nation wanted to move towards forms of renewable energy and cleaner energy, we looked at the various possibilities and saw that, we could go into solar, we could go into wind, and those were a lot more, reliable and could have a higher success rate than I think geothermal could. The problem, certainly, going back a few decades with geothermal, is that you run the binary risk that if you drill into the ground, you might not have resource that's available to produce anything. That's a pretty scary proposition for infrastructure investors or investors of any kind that are trying to produce electricity. And so, it makes sense looking in retrospect that it would have gone towards solar and wind, where you have resource concerns, but generally looking on a probabilistic basis, you could get a pretty good understanding of the amount of generation output that you would get after deploying wind or solar. The other important piece to note as a venture capitalist is that while we are funding early stage companies and technologies, we are, trying to figure out how to solve the problem to create, call it a machine. And so we're taking this risk on doing a company that's going to then create a pilot for this machine, and then they're going to scale up the pilot. And you have scale up risk there, but it's not insurmountable. Hopefully they build that, new machine. And once it's built, it's largely de-risked technology, and you can then go manufacture it and deploy it again and again. And that's exactly what solar and wind look like, right? So if you look at any solar farm today, you basically have a big row of modules, of solar modules that are lined up into what is ultimately a big block. And then you just repeat that block over and over again, and you have pretty good understanding of how to finance this, what your output is going to be. And so geothermal is a little bit more unique, and it's a little bit more tailored to the resource that's there. And you have all these other risks that made it a difficult choice when America wanted to run after renewable energy, to go after that versus going after these others. And so now we're at a pace where, fortunately, solar energy and wind energy have marched down the cost curve relentlessly in a good way, and are getting deployed at an accelerating pace and at a huge pace. And we're getting gigawatts put into our grid every year, which is fantastic. The issue that we're now seeing is that we want to fully decarbonize our grid, and that's pretty challenging. It is hard to get all the way there, even if we were to get 80% of the way there, to get fully there. That's because as we're decarbonizing our grid, we also are trying to electrify everything, right? And we're starting off at a pretty small point. And so we have to multiply something like 12, the globe has to multiply the amount of renewable energy we have today by a factor of, 12x what we have today. So that means adding petawatts to our grid, which is a pretty astronomical number. The other problem is we're using wind and solar, which are intermittent resources that have their own challenges. So we're trying to balance that out with batteries. And we're also, pretty slow when it comes to deploying transmission lines and infrastructure for actually moving resources of electricity from one part of, the country all the way to another. So you have all these challenges that are stacked up against you. And as has been talked about a lot at Pivot, a clean form of baseload generation is pretty darn useful. And so now we're, taking another look as venture capitalists, as folks with pockets of capital that want to go towards decarbonization, and saying, okay, what are the other solutions that we can look at now that are early stage technology that we can start to deploy? And I think that there are very few arrows where you can create baseload clean generation. I think it's, geothermal, it's hydro, and it's nuclear for the most part. Hydro has implicit limitations put on it so that you can't quite expand it beyond a certain point. Nuclear has a lot of other, problems when it comes to fission. Fusion is sort of a whole other story, and that's a different can of worms that we could probably, have another discussion on. And so we see geothermal and say, hang on, wait a minute, what about this? Like, we've deployed some geothermal, like the United States has, a few gigawatts right now of geothermal energy. Can we make this into a more, adaptable resource for the rest of our grid? And so, we're not looking at what the technology was even 2 decades ago. We're also saying, oh, hey, look in this time frame since we last took a hard look at geothermal, there have been tons of advances in oil and gas, right? And a lot of those advances can get applied over to geothermal. So we have better subsurface modeling technology, we have better drilling capabilities, we have all of these technological innovations that port over really well into geothermal, such that it accelerates our ability to tailor these solutions into resources that are better for our grid. I know that was a long, kind of windy answer, but maybe I'll pause there and hand it over to Tom as well to add in.
Thanks, Bryan. And Tom actually is a nuclear engineer by training, and I think it's really important that Bryan brought up our alternatives, and that there are few. All are being pursued at the moment, but it's on balance the sheer intensity of the number of what Bryan. I'm gonna coin that. What kind of watts did you mention?
Petawatts.
The petawatts. Okay,
not a term that's used frequently.
Okay, petawatt. Tom, maybe would you please tell us your perspective in your career before the DOE and at the DOE.
Yeah, thanks. I'm glad you brought up nuclear. Actually, it's always my first love. I actually spend more time working on Vogtle Units 3 and 4 than any other project in our portfolio. That they're almost ready to go to COD in the next year, so hopefully even sooner. So something that's near and dear to my heart, actually. So glad you brought that up, Bryan. But we've dealt a lot. I've dealt a lot with geothermal in the loan program office. It's one of the technologies we're actually very fond of. I've enjoyed working on for a variety of reasons. But there is risk there. And I think some of the things that you had brought up are worth the risk. Our risk really comes in the resources and trying to manage resources. You have two sides of it. You have like a production side well, you got the injection side well. And that's really where the key is to trying to de-risk these projects. The technology itself is not all that risky. It's really the underground portion where you're trying to predict what's going to happen, a mile underground for 20 to 30 years. And how do you handle that? What we do in LPO, just as a way of mitigating risk, just to begin with, basically we ask projects to have the production side of the well field proven out to us and a report produced on it by and commented on by an independent outside expert that the production side is basically proven out for the most part, even we start, or, that's got to be even done prior to diligence or during the due diligence process. Like that, we're going to be able to close on a loan without having the production side of the well field proven out. And then when we come in a little bit after that, we will help out with the injection side. But then how this whole well field is going to play out together is really still going to challenge you. You're not going to really know until after you turn the plant on. And it's a risk that's always going to be inherent there. And then the other is, how's that resource going to perform over many, many years? You have a PPA for offtake or your loan. You try to match the PPA offtake agreement with a loan tenor, 20 to 30 years. So, but you have to assume that that resource is going to decline over time. So making sure your PPA takes into account the degrading resource over time, and you've got sufficient well drilling reserves, short-term and long-term, as part of the whole plan. So there are many things you've got to think about, at least from a technology point of view or technical aspects that feed into the whole financial aspects of it as you're considering one of these plants. Again, the risk really isn't so much in the above ground part, really is in the below ground part. And that's the thing I think you really have to be prepared to think about as you're going through financing for one of these facilities.
Can all of you speak, or anyone please take us, just in terms of like just historical returns for, we can just start with like traditional energy and what investors have seen, and we can talk through the stage of investors, philanthropic dollars, venture dollars, but what are investors come to expect from energy, and why maybe isn't geothermal matching up at this point?
I could take a stab at that. I mean, I think that the return is always a basis of like the risk that an investor is taking on, and that evolves, from the development of that technology. So as you have an asset that's generating cash flow, the cost of capital of that asset and the return expectation will be much lower than if you have an asset that is a pilot or is in yet to sort of have a commercial scale facility. So, where in the life of its maturity it is going to impact an investor's expectation on the level of returns. That's one thing, Caroline. The other thing I'd say is, in this market today, what's interesting to note is that, year on year, we're just down about 10%, 10 to 12% in terms of capital raised in the private markets for clean tech, clean energy investments. So year to date, we've raised about $16 billion just across clean tech. Across all private businesses, we're down 13%, but in clean tech specifically, we're actually up about 100% in capital raised this year to date, from the same period year to date today, like in 22, to year to date in 2021. The only thing that's changed from an investor perspective is sort of what are some of the elements that they're looking at closely. And, I think the number one thing that's moved to every investor's top of the list as they start to think about investment and sort of the potential return they're going to generate truly is, in this market, commercial traction. That the leap of faith that occurred last year, where folks were able to take both, technology risk, operational risk, customer risk. I think in this market today, investors are very focused that the proof is in the pudding, and that proof is really commercial traction. Depending on where you are in the life cycle that we talked about earlier, your relationships with customers or strategic partners or strategic investors obviously could be different, but that's what folks are really looking to be able to de-risk the business and have more reasonable expectations of returns. I think in the private sector, for things that have technology risk, you're probably looking at expectations that are around 30 to 40%, where you have real commercial traction and pathway, revenue visible pathway to not just growth at any cost, but growth and profitability. You're looking at 15 to 20% sort of return expectations.
So if I could expand on that and just the numbers of where, a lot of the earlier stage projects for geothermal, because there is the first project risk, blended returns of, let's say, 6-7%, over 30 to 50 years. Question one is like, maybe what profile of investor could actually, accept those returns. And I guess second thing is, how did we de-risk, early, let's even, oil and gas, back in the day, and then more recently renewables. So, starting with a profile that Ananth is, Arash and Ananth and the team is all talking about, in terms of 30% type of returns is, now, large scale wind and solar is more like 6 or 7 as well. And, just your thoughts on that, and even what you saw already, let's say from, Tom, the DOE, because you've been doing a long time, Bryan at Prelude, and Ananth, where you've been using philanthropic dollars for, for quite a long time, Prime and their peers. So I open it up to, how we can show investors that this can be done.
Yeah, I can take a stab at that. So one thing that I do want to second what Bryan said. One problem that we have seen, and this goes into kind of what we've been seeing in terms of the industry writ large, is that there is a shortage of development capital. And then when you talk about high failure rates with reserves in traditional kind of conventional geothermal, that did put off a lot of people, it seems like, just to even start the development process for projects. Now, even today, even as we're looking at enhanced geothermal, we still keep hearing, even from people who should be fairly well informed about these things, we keep hearing the 6 to 8%, success rates and so on and so forth. But I am trying to understand geothermal, to be perfectly honest with you. It's not a technology that I'm very familiar with, but what I am seeing is that this concept of de-risking that Arash is talking about is already happening, right? Like that is the big story in geothermal. Prime's been following the story for some time. We have an investment in a company called Zanskar that is using artificial intelligence based predictive analytics to find resources. When you think about some of the other technologies that were discussed over the past 5 days, be it closed loop geothermal, shallow, heat rock, the hope and anticipation is that this catastrophic risk of failure in the early stages is minimized. So that itself is I just wanted to kind of put a pin in that and highlight the great story that we have going forward. And that's what's bringing some of people like me, for instance, back into this room to kind of see what's going on and see how we can help these new technologies find their way forward. And from a financing standpoint, Arash is absolutely right. Like it's going to take still from the standpoint of installation, deployment risks, performance risks, there's going to have to be movement from where these technologies are to where banks will get involved and traditional project financiers will get involved. And that's where we are trying to bring in catalytic capital to try and bridge that gap. But there is no easy answer that I know of anyway, Caroline, because if there was, then we would all be doing it. That's kind of where, that's basically the reason why Prime is trying to do what we're doing.
And maybe, Bryan or Tom, where have you seen successes already that you could point to, that where, it's clearly a lot of interest in geothermal, not just interest, but, but a lot of progression, but how to make it's never going to be easy, as Ananth said, but where can we show that route? Anything that you've seen, and that we can then repeat it like a million times so that people can hear it. And interesting, like someone else asked a question about, the DOE announced $100 million for geothermal yesterday, but nuclear is getting billions, already. I mean, is it literally just that the word is not out enough in geothermal? So a couple things there, but Tom, Bryan, any thoughts?
Yeah, I mean, I'll look less at the previous successes, and I might leave that for Tom, who's got a lot more experience in that arena, and sort of tackle the second part of that question, which is tied into what we were just talking about. So like Arash, you were talking about what investors want to see to invest behind a company and technology. and you're talking about the growth rates of sales and revenue and their customer traction. I mean, at the end of the day, like geothermal is playing in a commodity market, right? That all we're selling is steam, it's electrons and it's heat. And so really, at least from the Prelude perspective and how I looked at it when we were making our investment in this arena, was saying if they can be competitive, their levelized cost of electricity, if that can be competitive with all other forms of electricity today, then there's a market opportunity. Then I'm not concerned that their commodity that they're selling is going to take off rapidly. The question is, can you get to a point where their LCOE is going to be at that level, and what risk are you taking on? And so the point of successes that I'll point to, which are less project focused, which maybe Tom has more insight on, but the point of like successes in developing this industry that I'll point to are where there's venture capital funding going, right? So we at Prelude have funded Quaise Energy, and that is a novel system for developing geothermal using supercritical conditions. There is Fervo Energy, which is done a lot in pushing forward EGS geothermal systems, and then, which might be a redundant phrase that I just used, and then there is Ever, which is forging the way in closed loop systems. So I think for the first time in a long time, there is funding going towards these new mechanisms where investors like me see a pathway to achieving LCOEs that are attractive and scalable businesses with a large market opportunity.
The thing I'd add to what Bryan said, and he hit the nail on the head, is once Bryan sees that path, puts in money because he's at the venture tail, right? They do one well, two wells, and it's a consistent spec, the performance is consistent. And they could show like a document that's, shows that consistency and performance of the well. You can then take that to Caroline, your fund, and be like, look, this is ready for growth equity. All I'm doing is copy and pasting what I've just done 2, 3, 4 times into the exact same size wellbore, the exact same sort of technical specifications over 100 wells. That's really, when you think about technology and reducing technology and scale-up risk, that's what investors are looking for, is being able to copy and paste something over and over again. In terms of commercial traction, I think what people are really looking for is that this business, it is a business model that can generate cash flows and actually generate returns. On the comments about like nuclear versus geothermal and why nuclear is getting so much capital, it's just a more capital intensive industry is my perspective. It just needs more capital to get going, but I'm sure Tom's and got a really strong perspective there given his background.
Tom?
Yeah, well, that's certainly true. It is very capital intensive, time intensive, and scheduled. But yes, for sure. The one thing you need, we've had 3 projects with 5 power plants, geothermal power plants that we financed that I've been involved with over the last 10, 12 years. Couple of things, I suggest. Dealing with the geothermal community is different than it is dealing with other ones. I mean, these are generally smaller companies, don't have the capitalization of the others. There are resource challenges. They're not quite as sophisticated as you're going to find in some of the other energy areas. It's just the nature of the field. They're smaller. It's just more widespread. And you have to have a different mentality when you're dealing with the geothermal community, I think, than some of the other ones. It's a different group of mindset. The mindset's different. And it's very, very hard to replicate because you can't replicate the resource because you're trying to you can replicate the technology above ground, but you're going to move, a plant from Nevada into Utah or into California, Oregon. The resource is going to be different. So, and you're not going to really know that resource that well. You can do a couple of wells and you flow test them for a couple of weeks or a couple of months, but you still don't know how it's going to perform over 5, 10, 20 years. trying to predict that's very challenging. So trying to do a replication, you can do it above ground, but below ground, it's a great challenge, and I'm not sure of a simple way of doing that. And then, again, as I said earlier, really, what we look to at LPO is we like to see the borrower, the prospective project have at least a well field planned out, well in advance with good flow test data. But that's just half of the equation because you've got two sides. You've got the production, you've got the injection side. Now, we've been financing the injection side, not production, but how this whole well field can interact together, you're not going to really know until you turn that whole plant on. It's built and operating, and it can change dramatically from what your projections are because we've seen things like that. As I said, we've had 5 plants we've built. It looks like all of them we either have paid or going to pay back the loan, so we're going to be successful in all of them. But there's been challenges with most of them. And just one of the things what I've looked at is if you look at all the geothermal plants out there right now, probably the average production versus capacity factor is somewhere in the low 60s. That kind of mirrors what our portfolio is too. Look at the total capacity, what the maximum output they could put in. Let's just say it's 100, they're producing like in the 60 to 65 range. And that's probably, I did this quick calculation of all the worldwide geothermal power plants, and that's similar to what it is throughout the world, and it's similar in our portfolio. So that's something you really have to plan for in your financing and your whole structuring of your loan documents.
That's really important, Tom. And I don't want to be remiss without touching on this topic of just where Arash said, where the market is finding more comfort is that the investment has commercial viability, meaning it's close to revenue. And so we're talking a lot about, technologies that require, drilling, and they require a lot of project work. Maybe I'd like to talk a little bit about geothermal as not only power, but as heat, and thinking about district heat solutions and companies like Dandelion, which we haven't mentioned at all, that part. So if anyone has any comments about that, because it's not a distinct market. However, the time to market is a lot more immediate, meaning there's a lot more opportunities. So just wondering if anyone has any thoughts on that. And even Bryan, not to put you on the spot, but someone was asking a question about, that yes, Quiz is an amazing technology, getting a lot of immediate attention. In their words, said it seems like a lot of a moonshot type of technology, and asking, are there other, more commercially viable, ready to deploy, in the field type of opportunities, which could be one of them. And asking you, but let everyone take it, is that, have you considered those? And if not, why not? Because they would have a big impact on GHG reduction.
Yeah.
That's a lot.
No, absolutely. I mean, I think this is the core question, and this is absolutely what I had to think through when we were trying to figure out what investment we wanted to make in geothermal, if we could make an investment in geothermal. And it synthesizes everything we've talked about today. So fundamentally, the problem with investing in a lot of the new companies in geothermal is that they're running into this financing issue that we're talking about, right? That we're saying that you can create a geothermal project which will get something like a 6 to 7% IRR for your investors. It's possible that these are really efficient, that the technology is so novel that you might be able to push that up a couple of percent on an IRR basis, but call it 6 to 10% IRR. There simply aren't a lot of people that want to take binary risk in return for 6 to 10% IRR, because they understand that they could go around and do this all day long in solar or in wind with none of that binary risk. The folks, as we mentioned, the folks who do take that binary risk are oil and gas. Oil and gas are doing that binary risk because they might get 30% plus IRRs. There's a fundamental mismatch between the risk profile and the return profile that can't be bridged by investors. So ultimately, at the end of the day, what got me really interested in Quays is the fact that Quays could actually deliver a very high IRR, because the energy density of the resource that they're going after is so high that the energy, the electricity, the steam output at the end of the day far and away justifies the capital expenditure, and it also justifies the risk. I do not deny that it is, a heavy and deep technology problem, but that's why Preludes of the world exist. We exist so that we can invest money behind really challenging scientific or technology problems.
Thanks, Brian. That's me. I would love to get all your comments about the heat side of the equation as well. And then also, I do not want to forget about, a group that could obviously do the first projects, which is corporations, and just any of our collective thoughts of how we engage more of them, those with the know-how, which are potentially traditional oil and gas companies where a lot of this drilling technology actually resided to begin with. How can we have them come in as project sponsors to help de-risk, even for the growth equity people like me, because it is challenging even and you can't get to a cookie cutter model of the next 6 projects, who can sift through the difficulties of the differences and push through to get there. So yeah, I wanted to have everyone's thoughts about, corporates, but also about the heat piece of it.
Strategic investors are actually taking a very hard look at geothermal, to Brian's point around oil and gas. I think, if you look across, especially the service companies, neighbors, HMP, Baker Hughes, Schlumberger, they'll have exposure to geothermal one way or another. From a developer and perspective, I think developing geothermal assets makes sense for a lot of the oil and gas companies because, to Brian's point earlier, their natural core competencies fit. What you're seeing across the clean tech space is a lot of strategic capital. The groups like oil and gas companies, but more beyond, right? Even groups that don't immediately make sense. We did a deal where FedEx came in. We did a deal where Porsche came in. We did a deal where Vitol came in. So you're seeing a lot of strategic capital being deployed, not just because they have core competencies, but because they want carbon credits or other sorts of strategies to meet their net zero goals.
Anyone else? Any other comments about that, or corporates that they can call up and get cracking? I mean, from my perspective is that a lot of our business is doing business with those corporations and bringing them into the deals that we're looking at as an extension of them, and utilizing their technical know-how. And frankly, we're seeing that there's just a lot of shaping going on in the market of people getting ready for scope 1 through 3 emissions and and reporting and sadly less about actual investing in, but hopefully that cleans itself out in the next year and we don't need to dwell on it here. But any other thoughts, or and I feel like my heat thing is like nobody's really interested in talking about that way, and that's okay if we don't have any. And I admit I couldn't watch every session of this week because it's been amazing, and thank you, Jamie. But so if we covered some of that, I hope we did, because to me it seems like I'm really, from Pana perspective, I'm very interested in those pathways and seeing what we can do to shore up more projects, because they will be really very accretive. But does anyone have any thoughts about that?
No, I was just going to second your level of interest, Caroline. We are absolutely interested in looking at industrial heat. It is a huge contributor to greenhouse gases, and geothermal solutions are a potential solution. We're looking at them. I just, we're still in kind of early phases of trying to dig into the potential there.
Yeah, Carolyn, this is Tom, also from DOE's Loan Pro. Yeah, we also have interest in that area too. We've had discussions on that. We have not gone very far, but it's obviously a very interesting area. It's something we would like to see some applications come. But if we would see something like that, I would expect it to be more from a municipality applying for something like that, as opposed to specifically a developer of the technology. Yeah. Even like a university, something like that, but it'd be more from, again, a government, related entity, like I said, a city, a township, a region or something like that has a municipal, they cover an area for power or water or something like that, that they want to get involved with for their whole area. So that would be my expectation. If you would see somebody looking at something like that, would be more of a municipality type of setup.
That makes, yeah, no, that's great. Thank you for bringing that, because it makes a lot of sense about, just like local projects. So that brings me to ask about if anyone has a comment, and probably you do, Tom, about utilities and, where are they in all this, if anywhere, because I mean, I try to avoid working with them at all costs. No, I'm kidding. But this would make sense to me, but again, and I have to dust off my knowledge. I was an energy banker for almost 20 years, and like the kind of ratepayer schemes and all kinds of, like how maybe that could be instrumental to try to de-risk some of this, and just to do some lower returning early projects. We didn't cover this on our pre-meeting, but doesn't anyone have any thoughts about that?
I mean, the only thought I have about that, which is a little bit random, is the notion that there are existing schemes for utilities that want to shut down existing fossil generation assets and replace them with renewables. And geothermal is actually a really elegant solution if it works to repower existing fossil generation. And this actually helps bridge in the fact that there's not a lot of low-cost financing available for geothermal. So of the existing schemes that exist for utilities to do that, I forget the exact terminology, but it allows them to have cheaper cost of capital financing, which is done through a rate structure, which kind of ends up sitting on ratepayers, but it allows for cheaper financing for what would then be a geothermal system that can go repower either an existing facility or just take up the supply, lack of supply that would be required after that is shut down.
Thanks, Bryan. Thank you for validating I'm not totally insane, but I think, and listen, I do, because we do deal with a lot of utilities, and we do deal with a lot of corporates, and I can say that they're all trying to figure this out. So, and that's part of the issue, is the themes haven't all been set, but I think that's where a sticky widget like a geothermal should be in there constantly. Hopefully there's folks watching. So we only have a few minutes left. Any last thoughts from the panelists, and anything you want to bring up, any interesting deals that have been happening, again, on the funding route that are kind of validating, I mean, we know it. Arash is giving us the numbers. Again,
no, that's it, Caroline. I just want to thank you and my distinguished panelists and the organizers. Thank you.
Thanks, Arash. Anybody else? Any other comments?
I mean, I'll reiterate that sentiment. Thank you so much.
Yeah, this has been a heck of a week. Great. It's been amazing catching up on everything that's been going on in geothermal. And so, just keep up the good work, you guys.
Thanks, everyone.